Wealthsimple's prediction markets test could give Canadian investors a new way to hedge event-driven volatility inside tax-advantaged accounts. This is Modern Investing Techniques, episode 137. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,799, up 0.7%. The Nasdaq Composite reached 26,803, up 0.8%. The TSX Composite finished at 36,759, up 0.3%. Tech strength lifted Canadian equities while energy and financials lagged. The Dallas Fed revised its symmetric trimmed mean gauge to show core inflation at 2.6% year-over-year through June. Forecasters now expect July core personal consumption expenditures at 0.22%. About 20 days ago, we picked EPD in energy, and it closed down 1.45%, a reminder that sector timing still requires closing price confirmation. Prediction markets are platforms where participants trade contracts on future events, with prices reflecting collective probability estimates. Today's Wealthsimple test of these markets in Canada creates a potential new hedging layer for investors who want to express views on policy or corporate events without direct equity exposure. Implementation starts by opening a Wealthsimple account, reviewing the listed contracts, and sizing small positions that offset portfolio beta to specific risks such as rate decisions or earnings surprises. The approach has historically worked best when event outcomes are binary and liquid enough for tight spreads. Liquidity can evaporate quickly outside major elections or Fed meetings. Risk comes from low volume causing slippage and from regulatory uncertainty around Canadian prediction market rules. Canadian investors can test the feature first in a TFSA to keep any gains tax-free while learning the mechanics of event contract pricing. The test phase also hints at possible future expansion into sports and politics contracts, which would widen the set of hedgeable outcomes beyond pure financial events. Imagine you bought a broad Canadian equity ETF last week, expecting the Bank of Canada to cut rates on soft inflation data. Your order filled at the prevailing price, yet the actual inflation signal the central bank watches had already been adjusted by a new symmetric filter. That filter drops the top 20% and bottom 19% of price changes instead of the old asymmetric 31% and 24% trim. The mechanism matters because the revised Dallas Fed gauge raises the June core reading from 2.2% to 2.6%. Earlier low outliers were overweighted, and the medium-term trend is stickier than headline numbers suggested. Professionals always check both the original and revised series before positioning for the next policy meeting. The concrete misconception to avoid is treating every core inflation print as equally reliable. The fix is to compare the symmetric and asymmetric versions on the same release date before adjusting duration or sector exposure. This matters for TFSA holders because even small shifts in rate expectations can move bond ETF prices several percent in a single session. This is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Today we are monitoring CDR.TO on the TSX in the energy sector. The strategy is a valuation screen on an energy transition name that just reported quarterly results. Condor Energy's released unaudited interim financial statements for the 6 months ended June 30th, 2026, providing fresh cash flow visibility. There is no closing price or volume data yet, so we are waiting for the post-release reaction relative to 20-day average volume. Geopolitical headlines in energy could add volatility, and the maximum acceptable loss remains 8% from entry. The target is plus 4% to plus 8% if results confirm transition project momentum. Confidence is low because we have a single fundamental update without volume confirmation or technical setup. The setup demonstrates waiting for closing price confirmation before declaring any catalyst trade complete, exactly as required by the active rule on leadership change catalysts. Listeners see how an energy name with stated transition focus can be screened without forcing entry on incomplete data. The quarterly release gives concrete numbers on Central Asia operations that can be compared against prior periods for trend confirmation. Yesterday, we simulated buying X.to at $53.03 on the Wednesday open. We exited at $54.06 on the Thursday close. The position gained 1.94%, or $19.42 on a $1,000 position. The trade gained 1.94%, while the Nasdaq gained 0.8% over the same window, producing 1.14% alpha. Volume supported the move, yet the modest gain reminds us that single trade alpha remains variable. The earnings and dividend hike entry worked because volume supported the move. The BlackRock iShares Global X North America Equity ETF gives Canadian investors direct exposure to developed and emerging markets outside North America through a single TSX-listed vehicle. It reduces currency conversion costs and simplifies TFSA and RRSP allocation. The launch pairs with a second vehicle that adds Bitcoin exposure, allowing investors to combine international equity and digital asset beta in one account without separate wallets or FX trades. The Wealthsimple prediction markets test lets users trade event contracts inside a familiar brokerage interface. Canadian investors comfortable with volatility can size tiny positions to offset single stock risk. It is accessible to Wealthsimple clients participating in the current test phase. The interface already shows unavailable markets, signaling the firm may expand beyond the initial set of contracts once regulatory approval broadens. Economists adjusted the filter to a symmetric 19 out of 20 trim, lifting the June core reading to 2.6%. That signals earlier low outliers had masked a stickier trend. Add the revised Dallas Fed series to your rate path watch list, and rerun duration screens on bond ETFs before the next Bank of Canada decision. Most forecasters now expect a 0.22% July core PCE print that matches core CPI. Hold existing rate-sensitive positions, but set alerts on TSX financials for any post-release rotation. The new BlackRock iShares Bitcoin Integrated ETF combines global equities with Bitcoin exposure in one TSX listing. Size a 2 to 3% portfolio sleeve in the new ETF inside a TFSA if your current crypto allocation is below target. Condor Energies released unaudited statements for the first half of 2026, giving fresh visibility into Central Asia projects. Place CDR.to on the energy watch list and wait for closing price reaction before considering any position. Open your brokerage platform. Search for the new BlackRock iShares Bitcoin Integrated ETF ticker and compare its management fee and liquidity to your current crypto or equity holdings. Across 50 simulated trades, the win rate sits at 56%. Cumulative profit and loss stands at $333.39. Matched window alpha versus the Nasdaq reaches 9.3% across 45 benchmarked trades. The sum of per-trade alpha is 13.4%, with an average return per trade of 0.67%. The best trade reached plus 20.11%, and the worst trade finished at minus 11.80%. Our AI analysis continues to learn from patterns in volume confirmation and valuation discipline. Before we wrap, watch how the revised Dallas Fed gauge influences rate-sensitive sectors ahead of the next policy decision. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And if you'd rather watch than listen, find us on YouTube at Nera Network. Links in the show notes. One more thing. If you liked today's episode, our sister show OmniView is worth a spot in your feed, a balanced daily world news briefing that takes every side seriously. It's one of the Nera Network's daily briefings, all free at neranetwork.com. And on the website, every episode's visuals live in our free image gallery at neranetwork.com/gallery. Royalty-free under Creative Commons. Download with attribution. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you did